Economic roller coaster, buckle up America, the US economy, land of opportunity, more like a roller coaster ride from hell. One minute we're told everything is peachy, the next we're staring into the abyss of economic ruin. Strap in folks, because 2025 is shaping up to be one wild ride. Conflicting data, political turmoil, and global uncertainty have collided to create a perfect storm of economic anxiety. Is this just a blip on the radar or the start of something far more sinister? The answer, my friends, is about as clear as mud. Let's dive into the chaotic world of the US economy and try to make sense of this mess, shall we? Hold on tight, it's going to be a bumpy one. GDP confusion, growth or contraction? It's a question that has left many scratching their heads. On one hand, we hear reports of growth, while on the other, whispers of contraction loom large. So, what's really going on? The numbers don't add up. Accountants and financial analysts are left puzzled, trying to make sense of the conflicting data. It's like trying to solve a puzzle with missing pieces. First up, the GDP report. This report is supposed to be the gold standard for measuring economic health, but lately it seems to be sending mixed signals. The supposed barometer of economic health. The GDP is often looked at as the ultimate indicator of how well an economy is doing. But what happens when this barometer is broken? Except, it's more like a broken barometer right now. The data is erratic, and the readings are all over the place, making it hard to get a clear picture. Some outlets, like the Wall Street Journal, claim the US economy grew by a respectable 2.1% in the first quarter of 2025. Sounds promising, right? This kind of growth would typically be a cause for celebration. Not so fast. Before we break out the champagne, let's take a closer look at the other side of the story. CNN and The Guardian paint a very different picture, reporting a 0.3% contraction during the same period. That's right, a contraction. This stark contrast raises serious questions about the reliability of the data, the first in 2 years. A contraction like this hasn't been seen in the past 2 years, making it a significant event that can't be ignored. Suddenly, the rosy picture of economic prosperity starts to look more like a bad paint-by-numbers project. So who's right? The conflicting reports make it hard to know what to believe. And who are they trying to fool? Are these discrepancies a result of genuine errors, or is there something more sinister at play? The truth, as always, is likely somewhere in the murky middle. The reality is probably not as clear-cut as either side would have us believe. One thing's for sure, this discrepancy doesn't exactly inspire confidence. When the numbers don't add up, it leaves everyone feeling uncertain and skeptical about the true state of the economy. Trump's tariff tornado, a trade war on our own soil? It sounds almost unthinkable, but here we are, facing the reality of economic conflict right within our borders. The term trade war often conjures images of international disputes, but this time, the battlefield is much closer to home. Speaking of confidence, let's talk about the elephant in the room, the uncertainty that these tariffs bring to businesses across the nation. Companies are scrambling to adjust their strategies, unsure of what the future holds. Or should I say, the elephant with the questionable spray tan. Yes, we're talking about Donald Trump, whose policies have once again taken center stage. That's right, Donald J. Trump is back in the White House, and he's brought his favorite economic weapon with him: tariffs. His return has reignited debates and discussions about the effectiveness and consequences of such measures. And he's not holding back. Trump's second term has seen a whirlwind of new tariffs on imports, targeting a wide range of goods from various countries. The goal? To protect American industries and reduce the trade deficit, but the impact on the ground is palpable. Factory workers and businesses are feeling the strain as the cost of imported materials rises. The ripple effects are being felt across the supply chain from manufacturers to consumers, including a blanket 10% tariff on almost everything coming into the US. This sweeping measure has left many industries grappling with increased costs and uncertainty about future trade policies. And for our friends over in China, well, they're looking at a whopping 145% tariff. This move has escalated tensions between the two economic giants with potential repercussions for global trade. Now, some argue that these tariffs are necessary to protect American jobs and businesses. They believe that by imposing these tariffs, the government is leveling the playing field and encouraging domestic production. Others, however, see them as reckless economic warfare that could backfire spectacularly. Critics warn that these tariffs could lead to higher prices for consumers, retaliatory measures from other countries, and a potential slowdown in economic growth. And guess what? The early signs aren't looking too good. Stock markets are jittery, businesses are voicing their concerns, and the overall economic outlook is becoming increasingly uncertain. The question remains, will these tariffs achieve their intended goals, or will they lead to unintended consequences that could harm the very economy they aim to protect? Inflation explosion. The cost of living is skyrocketing. Remember when a gallon of milk cost less than a gallon of gasoline? Yeah, me neither. Inflation is running rampant, and it's hitting Americans right where it hurts, their wallets. The Consumer Price Index, CPI, has surged by a staggering 4.2% in the past year. That means everything from groceries to gas to rent is more expensive than ever before. And for those on fixed incomes or struggling to make ends meet, this inflation explosion is nothing short of a disaster. So, what's fueling this inflationary firestorm? Well, Trump's tariffs certainly aren't helping. But there are other factors at play too, including supply chain disruptions, rising energy costs, and good old-fashioned corporate greed. The stock market, that fickle beast, is also feeling the heat. After years of seemingly unstoppable growth, the major indexes have been on a roller coaster ride of their own lately. The S&P 500, for example, is down a worrying 5% since the start of the year, and the tech-heavy Nasdaq has taken an even bigger hit, plummeting by 8%. Even the mighty Dow Jones hasn't been immune to the selling pressure. So, is this just a healthy correction after years of exuberance? Or are we witnessing the early stages of a full-blown market crash? Only time will tell, but one thing is for sure, investors are nervous. And when investors get nervous, bad things tend to happen. Unemployment unease, job growth slows to a trickle. Unemployment. That perennial economic indicator that everyone loves to obsess over. It's a topic that can make or break political careers, influence stock markets, and shape the economic policies of nations. But what does it really mean for the average person? How does a slowdown in job growth impact our daily lives and future prospects? On the surface, things might seem okay. The unemployment rate is hovering around 4.2%, which historically isn't terrible. In fact, many would argue that it's a sign of a healthy economy. People are working, businesses are operating, and the wheels of commerce are turning. But is this the full picture? But dig a little deeper and you'll find a more troubling trend emerging. Job growth has slowed to a crawl in recent months, with only a paltry 62,000 jobs added in April. This is a stark contrast to the robust job growth we saw earlier in the year. What could be causing this slowdown? Is it a sign of things to come or just a temporary hiccup? That's the smallest gain in almost a year, and it suggests that the labor market may be losing steam. For many, this is a worrying sign. A slowing job market can lead to increased competition for available positions, making it harder for job seekers to find work. It can also lead to stagnating wages, as employers feel less pressure to offer competitive salaries. Now, some economists argue that this slowdown is just a temporary blip. They point to factors like seasonal hiring patterns, changes in consumer demand, and even global economic conditions as potential explanations. They believe that the job market will bounce back in the coming months, and that this slowdown is nothing to be overly concerned about. But others worry that it could be a sign of deeper economic weakness. They argue that the slowdown in job growth could be indicative of underlying issues within the economy, such as declining business investment, reduced consumer spending, or even structural changes in the labor market. These are not problems that can be easily fixed, and they could have long-lasting impacts on the job market. And with inflation eroding wage gains, many Americans are finding it harder than ever to make ends meet. Rising prices for everyday goods and services mean that even those who are employed are feeling the pinch. For families trying to budget and save, the combination of slow job growth and high inflation is a double whammy that makes financial stability seem increasingly out of reach. Consumer confidence crumbles, the American dream on hold. Consumer confidence, that elusive feeling that things are good and getting better, is taking a nosedive. And who can blame people for feeling pessimistic? Inflation is eating away at their paychecks, the stock market is gyrating like a caffeinated squirrel, and the threat of a recession looms large. It's enough to make even the most optimistic American reach for the antacids. The latest surveys show that consumer confidence has plummeted to its lowest level since the dark days of the 1990 recession. And when consumers lose confidence, they stop spending. And when they stop spending, the economy grinds to a halt. It's a vicious cycle, and it's one that we desperately need to break. The trade deficit dilemma: are we importing ourselves into oblivion? Remember those tariffs we talked about earlier? Well, they haven't exactly been doing wonders for the US trade deficit. In fact, the trade gap has widened to a gaping chasm in recent months. Imports have surged by over 40% as businesses stockpile goods ahead of further tariff hikes. Meanwhile, exports have barely budged. This imbalance is unsustainable and is draining billions of dollars from the US economy. So, what's the solution? Well, some experts believe that we need to renegotiate trade deals and get tough on countries that engage in unfair trade practices. Others argue that we need to focus on boosting domestic production and exports. Whatever the answer, it's clear that we can't continue on this path of ever-increasing trade deficits. Can America avoid an economic meltdown? So, there you have it, a snapshot of the US economy in all its dysfunctional glory, conflicting data, reckless policies, and a whole lot of uncertainty. It's enough to make your head spin. The big question, of course, is, can America avoid another economic meltdown? The answer, my friends, is a resounding maybe. Seriously, it's impossible to say for sure. There are some glimmers of hope. The Federal Reserve has kept interest rates low and the Biden administration has proposed a massive infrastructure spending plan. But will these measures be enough to offset the negative forces at play? Or are we hurtling towards an economic abyss? One thing's for sure, we're living in interesting times. Buckle up, America, and get ready for the ride of your life.